The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of these Believe cards. This is by Norman Vincent Pearl. Never talk defeat. Use words like hope, belief, faith, and victory. Market-wise, let's take a look at it out here. We had the Dow Industrials down 42, NASDAQ off 11, S&Ps were flat, gold contract down $6.90, trading at $1,258 an ounce. Silver off 4 cents at $19.02. Platinum off 10 at $1,453 an ounce. Copper flat at $3.18 a pound. Light sweet crude, they finally hit it, down $1.25 at $102.86. Bonds, check this out, folks. This is so cool. It's amazing. The 10-year is up 17 ticks at 126.13. The 30-year is up 1.7 ticks at 138.19. They're both ABC structures. No one believes the bond want to go higher, yields want to go lower, but guess what? Yields are going a lot lower, bonds are going a lot higher. King dollar up 195 ticks, trading at 80.60. You have the euro down 39 at 135, and you have the yen trading down 13 at 101.84. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, what do you have? You get another high out here. We hit 14.46. You close at 1910. We do volume of 616 million versus 658. We go over to the SPY. You take a look at the SPY. What you have with the SPY is this. SPY, we did 64 million shares out here. Hung up there. Got over the high yesterday. 191.82. We closed at 191.38. Bottom line, you know, just to me, it's a bottom line. When you're going to get back inside the lower range. Now, the lower range inside the SPY is 189.70. Dow Industrials, we take a look at the Dow. What you have with the Dow is this. Dow Industrials, sideways move. You're down 42, but realistically, that's a sideways move, okay? The high in the Dow is 16,735. We got yesterday to 16,688. You know, we'll see if, in fact, you know, the Dow wants to basically give it up because the 631. Oh, check this out. Okay, this is cool. How I was just talking about the aspect of the S&P getting back inside the lower range. The Dow has to come down 2 more points. It's 16,631, and we're at 633 right now. NASDAQ Composite. What do we have with the Composite? What you have with the Composite is this. She also goes sideways. She did 1.7 versus 1.8 billion. Bottom line is that the swing point where ICE is 42.86. We'll see whether it can make it up to that level. The NDX 100, the 3 Qs, gave it up. So what the 3 Qs did, and I'm really glad it got to another high today. We got the 91.10. And what you have with the 91.10 area, we closed at 90.78. That got over the March 13th level, which was 90.93. And then you closed at 90.72. Your correlation there is 29 million versus 48 million. You know, you're right next to the high, but the reality, it just looks like let's go inside the NDX 100. So inside the NDX 100, this is what you had today. Bringing it up was Micron Technology. It was up 55 cents. Broadcom was up 57. 21st Century was up 38 cents. And Wynn Resorts was up 235. Bringing it down was eBay was off $1.38. Vertex Pharmaceuticals 164. We have to go over the biotechs. Take a look at it. Green Mountain, Corey Green Mountain was down 246, and you had Whole Foods down 80. If we go look at the, let's go look at the IBB, because the IBB, that's not bad. It was that was up, well, it was down 88 cents. Gold contract. We go over to gold. We take a look at gold. This is what we have with gold. Gold today, 155,000 contracts. That's still big numbers, man. So gold is in a confirmed ABC down, folks. It's 12.27. That's your price target. We're at 12.58 right now. We go take a look at the silver market, and the silver has set up differently. The silver has not broken out the bottom yet, but I suspect that it looks like to me like it's actually going to hold, which would be a beautiful thing inside the silver market. So when we take a look at the silver market today, we did 34,000 contracts. That's still going into 36,000. Yesterday, we did 56,000, which was going into 52. It's going to be a close call here. Close call on silver. No two ways about that. Now, bonds. Man, oh man. Check it out. So, the 10-year went up 17 ticks today. What's happening here is this. You know, some markets, folks, love doing ABC structures on the way up and the way down. Well, guess what? Bonds have been doing it over and over and over again. Did it again. What do we take it out with? 2.7 million contracts. Took out the 2 million contracts, which in itself was an ABC structure. So check this out. So now you got an ABC inside an ABC. This ABC gives you, let's see, 123.16. You get $3 approximately. Man, 128. We're on the way to 128.50. The yield on the 10-year right now is 2.440. That thing's going to be down 225 in a heartbeat. Pretty amazing. The 30-year. We go take a look at the 30-year. What we have with the 30-year is this. She does 723,000 contracts. Blows away a B point again. This is two separate ABC structures too. Man, this is a... where 141 is the number on this 30-year, and that 141, by the way, what is happening is that the way this is coming into the 141 is saying, guess what? It wants to blow it apart. You know, so where the 141 is, by the way, is this. The 141 is just going back up to ice. So in that context, that could be the end of the move. We'll see, and we'll see how it gets up into that level. Right now, the way it's trading into that level, it looks to me that it's going to get up into the 141, probably go sideways, and then just basically blow away the whole rest of the months that it was trading into, meaning we'll get up and over 153. That's the way it's set up. See, the correlation, folks, inside the 30-year, in the 10-year, inside the 30-year, is that, you know, you heard many times that, okay, the bonds get smoked from the top. Well, they did get smoked from the top, you know, after they've been going up since 1981, but they never did a 0.6818 retracement. They did just over 50% retracement. So what you could have inside of this, which would just absolutely blow everyone's mind, is that you could have a 45.8 a B structure, which would get you in 45, 55, 65, would get you into a 171 bond. That's what it would get you into. You know, because right now, that is still an ABC structure. It has the ramifications of an ABC structure on the way up. That's the way that is set up at this particular point, because we did not do the 0.618 retracement. We did just over 50, and you have monster volume coming topside. Dollar index. What do we have with the dollar index? Dollar index out here today goes topside. She does 13,000 contracts. Now, the dollar's going to need more juice behind it. She's going after the last swing point out here, which is the 80.77. I suspect we're going to see it run up to the 81.61. And that 81.61, the way the gold market is trading out here, that's going to put some damage inside that gold market. Let's go to Dave in Clearwater. Hey, Dave, what's going on?
What a ride today, Tom.
Yeah.
What an absolute ride. Did you catch the bond openings at 7 o'clock last night when the Asian trading kicked on?
No, I didn't.
We had the contract rollover, Tom, right?
Yes.
We had as you well know, okay? So there's always crazy stuff that happens with a contract rollover.
Right.
But let me just kind of pull this up here, right? I'm looking at right now the notes, okay? Notes open up on the U4 contract, right?
Yes.
About, let's say, about 6:50, 7 o'clock.
Right.
Currently trading at 125.285.
Yep.
About 30 seconds. And then goes straight down to 125.025 and then powers straight back up.
Hey, you stay right there, Dave. This is Tom O'Brien. We got Dave from Clearwater. We want to hear from you, folks. Our phone number is 877-927-6648. We ended out, finished out 42. NASDAQ off 11, S&P's flat. We're going to be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 42, NASDAQ off 11, S&P's up 2. We got our man Dave from Clearwater. So are we going to look at the natural gas, too? Is that what you want to look at?
I want to talk, if there's time, I want to just show you something on natural gas. I also want to show you something on the SPY on top of it, because we've got tremendous harmony going on right now with the SPY.
Okay.
Going back to natural gas, man. As you know, we're kind of texting back and forth last Thursday on the EIA report, and Tom, there's no denying that the volume on the downside. There's always crazy volume on what I call Henry Hub Thursday.
Yes.
And there's a lot of volatility just because, just what the market expectations are versus what the EIA report is at the hub.
Right.
Depot can send it either way. But if you don't mind, pull up the natural gas, put it on an hourly.
Okay. 60 minutes. Okay, good.
Okay, so now, granted, what I'm about to say to you, I don't have the continuous contract the way Bloomberg does, because it's stringing before, the M4 as well as the M4 volume contracts on there. But as you see, we had a spike up. I don't want to give the exact numbers because your numbers might be slightly different. But if we look at the hour on 9 a.m.
That's right. No, I see it. Yeah, that's the spike.
Move, right?
Yep. Then you get the push at 1400, right? Yeah.
You got it. Now switch over to May 22nd at 9 a.m. in the 9 to 10 o'clock time frame.
Yeah, I'm not going to be able to do that easy. Go ahead.
Well,
that's all right.
Let me just lay it out for you. We had the spike up on the 15th. We had the spike down on the 22nd. The spike down volume-wise was not as intense as the spike up. It just completed an ABCD up on the way up to the 618 retracement.
Oh, cool.
From the move down.
Yeah.
On May 7th.
Right.
So now we both know that's a sell guard lead, right? Now, if you look at that sell guard lead, Tom,
okay,
the 618 retracement takes it right to the opening price point on May 15th. I am postulating it's time to get along on gas after it does that retracement. I'm anticipating a volume retracement lighter than what I've seen.
That would be sweet. Yeah, no, I see. What he's saying, there's no doubt that it's the sell there. You don't do the sell. Well, you can if you want, but then you wait. It comes back with lighter volume, and that's the buy for the expansion up to the 480 mark. Right.
Classic timing to trade.
Right. Sweet.
Classic timing to trade.
So,
can I move over? You got time to get over to the SPY?
Yeah, go ahead.
All right, I want to talk about harmony, man. This thing is straight out of Larry Pesavento. Okay. Using the SPY.
Yeah.
We got the benchmark on April 4th, right? Price accelerated volume moves down. Does it down? Does a counter trend bounce? Test on lighter volume on the 14th. 15th, we get the hammer candle moves north. If you look at April 15th, Tom, use that as your A point. There's your A.
Okay.
Your B point is on the 22nd.
Yeah.
Your C point is the hammer candle on the 28th.
Okay.
And if you look at that, you got a 1-to-1 AB relative to a CD price projection coming at a D point of ding, ding, ding today.
Oh, I like it. Okay.
CD1 number 1.
Yeah.
If you look at the retracement from that move from April 4th down to the April 15th that we just talked about just now.
Yeah.
Okay. That's a butterfly.
Right. Now, I can see that. It's screaming it. Right.
It's screaming it. Plus, just to show you the harmony within the harmony, we're looking for multiple ABCD patterns closing in all at the same time.
Right.
So if you look at the major ABCD, that CDD move,
yes,
that started on April 28th, has another ABCD within it.
It does.
In addition to that...
Is that in harmony, too, that other one? Yeah, it is. Okay, cool. Okay.
Not only that, the icing on the cake is that secondary ABCD move up, that CD leg, has another AB equals CD with a 1.618 expansion on the CD relative to the AB. So there's a bunch of patterns completing all at the same time. And granted, Tom, trying to short this market with the quantitative easing, everything we've seen has been nothing less than a pain amplifier. But we've got several D points coming in at the same time. We got the dollar moving north. We got a conviction move on oil going south, and we all know that the S&P has got a lot of energy stocks built into it. I'm building the case. I shorted it, man. I shorted it on the close.
I like it. I like it. You're always awesome, man. It's a beautiful thing.
So that's what I'm saying, man. That was exactly what I'm saying. Also, just one last comment here before I don't want to hog up all the time. I'm making a prediction. I can't tell you why, because it comes under the can't reveal on the air. But between you and I, I'll be happy to talk to you about it in person. Gold's going to move lower before it goes north, granted, but there's a geopolitical fundamental shift, my friend. It's coming. Gold is going to go down, and then it's going to go sky freaking high. And for reasons that I'd like to talk to you about face-to-face next time I'm in the office, I'll come by Clearwater, come by and see you. I can't talk to you about it on the air, but there's some cool shifts coming in the wind. Gold is going to go lower, but then it's going to go higher, much higher.
I like it. I like it. Okay, brother.
Take care, Tom.
Have a great one, man. Have a safe one. And, folks, now, okay, we're talking about shorting the market, and guess what? The best way to short this market with defined risk is Nadex, okay? We got our man, Mr. Darrell Martin, and don't forget, folks, each and every trading day, 1 to 2 Eastern Standard Time right here. He has a great program. If you haven't test drove the Nadex platform yet, come over to our website at TFNN. You're going to see the banner on the top and on the side. You can hit that banner, bring the baby up. It's an outstanding platform. We're talking about divine risk. Darrell, what's going on?
How you doing, man?
I'm doing great. You know what's so funny, Darrell, is that when he was going over this, right?
Yeah.
It was like, oh, man, I've been sitting there itching, okay? That's what it comes down to, right? And if you heard this morning, folks, this is really cool. J.J. Kinahan was on CNBC this morning. I know J.J. really well. He's a great guy, number one, great trader. And it was wild what he said, and I emailed him earlier today, because what he said was that, he said a couple of things. Right. One of the funniest things he said, to me personally, was that, everyone that shot this market thinks it's the best trade they've ever had on. And I was, at that point, I was going to email him from home and say, well, I know exactly what you're saying, okay? I'm not, at that point, but yes, we are at that point, and it's been, I thought, the best trade for quite a while. Then, though, then what he came out with, and this was really cool, what he came out with was this. And JJ, folks, is TD Ameritrade's chief strategist, okay? Then he came out with it. He says, he says what has happened and what does happen, and Darrell, you had brought this up a couple weeks ago. You brought it up in the context of the volatility trade in the summer. He brought it up in the context that the VIX, folks.
That's what I was talking about, the VIX.
When the VIX is this low, the last 3 times it was this low. It was the last 3 times within this low. Within 3 weeks, it doubles in price. Doubles. Okay, so it's like, okay, man, we're getting close, man. So I thought
that's what I was talking about on half the show today. I was going into the VIX. I was going into the basically where we're at right now.
Yes.
And I mean, we have not been here for a while.
Right.
And we had 2012, and the last one was 2007. And then we'll go from we'll go to 10, and then we'll pop up to 2025 in a heartbeat, which means a massive pullback happens at the same time.
Yeah, exactly. Yeah, when the VIX goes up, folks, it just means the thing that's really wild. That what I always thought was really, I couldn't quite figure out. I still can't figure out why that is the fact. But what volatility means, folks, is you go down. Right? That's all it means.
Yeah.
Volatility in the market means you go down. It's not. It doesn't mean you go back and forth. It means you go down. So it's funny. However that worked. It's
basically when the house is burning down, everybody runs out to buy house insurance.
Yeah, it's too late.
That's what pops it up.
Darrell, you stay right there. You stay right there, folks. Darrell and I are coming right back. We ended out, finished down 42. NASDAQ off 11. S&P's off 2. Gold down 680. Silver off 5 cents. Bond market, folks. 10-year up 16. 30-year up 1 full point and 8 ticks. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had, let's see, Twitter was up $3. DSW got smoked. We'll go over that in the next 15, 20 minutes. That was down $8.90 or 25%. We had 3D Systems. That got taken south, too, by about 10%. That was down $6.20. eBay was off of $1.38. We're talking with our man right now, Daryl Martin. And don't forget, folks, every trading day, 1 to 2 Eastern Standard Time. Daryl has an outstanding program. Daryl and I do a program Friday mornings, 10 to 11. All that programming you can get right on your cell phone at tfnn.mobi. 9 a.m. to 6 p.m. Eastern Standard Time each and every trading day. When we start talking about the Nadex platform, folks, just as Dave was setting up the short positions inside the S&P, what does happen, which is a beautiful thing, is that we have low volatility. We were just talking about the VIX. These these contracts inside the Nadex platform, they're, basically they trade like option contracts. So you can pick whether it's the daily, intraday, and with the low volatility at this point, it works out a lot better, which is just wild. So it's going to be interesting here for the rest of this week, because we know we have a short week, Darryl, and we really, folks, this is where this gets really wild. You really only have tomorrow for real volatility. Friday, it's going to calm down again. Mondays and Fridays in the summer, it's unusual unless the thing can get going on a Monday. And that, when I say get going, get them both ways, going up or going down. You get something going at the beginning of the week, then you can have action,
So, but I mean, yeah, we got So now, when he was talking about over at TD Ameritrade now, and we're at this low, he's looking obviously at the doubling of the VIX here in the next few weeks, right?
Yes.
And what's really interesting too is depending on what seasonality you're looking at.
Right.
I was talking about this, like looking at 2 years, like this is the 2 year seasonality right here.
Okay.
And look at now the thing is we're diverging. Okay, we're going down.
Yep.
Look at that massive spike.
But that's good. So when you're driving in your car right now, folks, what we're looking at is the summer seasonality type of spike.
Yep.
And as Darryl just said, we're divergent, meaning we're even lower. Now, the cool thing is that what does happen, and this is why, if you trade, what happens with the VIX, folks, I don't trade the VIX. I don't really like the VIX. I don't like how it trades. Because what happens with the VIX, you have to be in the fact before it, okay? And it's like, okay, I've seen the VIX. I just remember the 90s. People thought it never, would go down further, and it just kept going further and further and further down. It just doesn't, But what does happen, if you hit it right, well, guess what? You wake up in the morning, and the thing is, almost double. Because that's how it works. As Darryl just said, it's an insurance policy, and it's too late to buy it once it's already done.
Yep. That's what I was saying. It's like today on my show, I was talking about where the VIX was and where the market was.
Yes.
And I'm like, if you're holding longer-term positions, stocks,
right.
and, ETFs, etc., that are market-based, not contrarian.
Yes.
Like, now is the time to go in and hedge off those positions.
It is, and you can do that with the VIX.
Cheap.
Yes.
Yep.
Right.
The options are cheap, and I mean you could buy SPX options and just beta weight your stock portfolio.
Right.
And then just go in, and once you beta weight it, then you just get a delta, position on there.
Sure.
But you can get it really, really cheap right now. You have to be in ahead of it. And when you see these peaks, these hits, that's when you go in. And now, on the flip side, when it flies down, and you get that extreme, that double on the VIX.
Yes.
I mean, apart from some massive fundamental crash news, which I don't see coming right now.
I don't either. No, there's not going to be a crash, right?
But, I mean, we'll get pullbacks.
Oh, yeah.
Strong pullbacks, So
it'll
when that
feel like
happens,
a crash, but it won't be. Right.
When it feels like a crash and that VIX has popped way back up there again.
Right.
I guess at about 25 or so, which is the number I was talking about today.
Sure.
That's when you actually take your puts off.
And start selling the premium, right?
Well, you can sell you can actually go in and short the puts if you wanted to at that point. But, I mean, you take them off to take all the profit off on the puts. Because basically you're collecting all. Not only did you make money on the down move, but they're really expensive now.
Exactly.
So you made double money. You made money in direction and implied volatility, pumping up the cost of that insurance.
Yes.
So you get double the profit. And now, that the extremes happen. The market's done this little mini correction. It pulls on back up. And now you made that money on the way down. You held on to your positions. took off all the profit on your insurance and then let the thing go right back up without having to open and close the position. And so you get the move down and the move back up, because since you made the move down, you actually are collecting the money back up on your, your stock. Or
exactly. No, there's no doubt about that, man. Yeah.
And some people are like, well, what do I do if it keeps going down? Well, get out of your stock, because there's no good reason to keep being in it.
Yeah.
Start going short, whatever. But I mean, it's just I just look at just a normal chart on the VIX. It's really it's amazingly simple. And you sort of have to go back to the pre 07, 08, this little weird thing that we've had.
Sure.
Going on with all the financial crisis and everything else. And I'll just look at a standard chart. I'll back out. I look at like a weekly or maybe even a monthly view is actually even better in my opinion. And I like Thinkorswim because you can go back and you can really load like a ton of data.
Sure.
And just start looking at what are the highs, what are the lows, and I'll just grab their price level.
Look at that in 07. Was that went to 90? 89.53. Oh my God.
Oh yeah, that was 08. Yeah, that was the crash.
That's amazing.
So we're going right in there to 08. It's sort of weird the way the years are. It's like that's the beginning year versus the mark at the end.
Right.
And but yeah, exactly. So you go like right over here, but if you look at this, you plot this out over here, you can see, okay, well that's pretty average, low where we're at right now. This is what JJ was talking about. But then you also go over here and you go, okay, well the next level up about 20, that's it's sort of like looking at a support resistance line, but it's on the VIX.
Right.
And then you got another level right up here, and then you basically got major peaks, like right at this level. So this is an area like right here. If you go in and we correlate this directly to,
and when he says right here, folks, it's the lows we're talking about. Go ahead.
Exactly right. We're right at like about a 10, 11. Right there. That's where you're looking at the market's looking at doing a pullback. That's where you're buying your puts or whatever, to hedge your position.
Sure.
But then we're looking for about a pop to about 20.
And you might get more. Exactly. No,
you might get more, but I mean, pop to about 20 is going to be pretty. About a 10-point swing is going to be a pretty normal move.
Sure.
Now that's over the course of like a year. We'll get it like in a month.
Right.
Is what will happen. It'll just fly. And so that's when your options are going to get really expensive. It's going to be great for premium collection. It's going to be great to close out options that you were long or short on.
Yes.
And then most likely, unless there's some really devastating thing happening financially in the global markets, the market will chill out and resume its upward trend. But you can use that as a support resistance for when the pullbacks are happening back and forth. When they when should the extreme be about hit? Okay, buy some puts. Now when should the correction be about done? Okay, get out of your puts.
Right.
Start looking at premium collection strategies, things like that, because what's going to happen is that implied volatility is going to go way down, and it's going to cause a volatility crush.
Yes.
So it's going to suck the money right out of the thing.
And folks, when the crush comes on, it's so fast, it's unbelievable. I mean, it's just...
And it goes both ways.
Yeah, exactly.
So it's like we talked about before. I was in on a flash crash. On the flash crash, I was in.
Right.
And I was short, and I had some calls protecting me.
Yes.
Just riding the short, like hour, 2 hours in the morning before the thing, started going into high gear. And it's flying down. I wasn't even looking at my call. The thing flies down. I mean, I'm just closing out my futures, and I'm like, I'm done.
Yes.
That was too fast. And I'm figuring my calls are worthless. I go back and look at them, and I mean, they are massively increased in value because the implied volatility is the opposite of the crush. It got inflated.
Right.
And that's sort of the same thing I'm talking about here. Obviously, it's not going to happen in another 2 hours. But, the market flies back. The market goes down, and the VIX goes up. And your options are worth more money, and they went direct. If your puts, you've made money on the way down. It's really just a very simple way. It's one of the things a lot of investors should look at, and it's one of the simpler strategies to employ on. I even know guys that will use this on IRAs, 401ks, things like that.
Sure.
Just as a simple, obviously the money's separate unless they have a self-directed 401k, but they go in and basically they just take some of the money just to hedge off some of their portfolio, and like you have to learn a little bit. You have to learn about beta weighting and delta. And there is a little process in there, but it's definitely worth it. So you're not just buying and hoping that in 20 years your money's still there.
There's no doubt. There's no doubt. And listen, in that context, folks, if you haven't test drove the Thinkorswim platform, they do just about most of it for you on that platform. You can come over to our website, test drive the platform. North has his own show on Tuesdays at 12 to 1. And, he walks you through that platform, and, he's been really doing a heck of a job having people understand just how powerful that thing is, man.
I've been using that thing for like 8 years.
Yeah,
so,
there's no doubt.
And You get that platform, and then for your intraday trading, your weekly trading, you go in. You want to take advantage of volatility. I mean, I look at what I do on this. What I was talking about is I go in and when it's low, like at 10 or 11.
Yes.
I'm doing a lot of if I'm doing the binary trades. Okay.
Yes.
I'm going and buying these things for like $5, $10, $15.
Yep.
Because they don't cost anything and they're close.
Right.
So if you're even halfway decent at calling direction, you can get some nice trades off. Okay.
Sure.
But when it flies up, you're going to flip around and do a premium collection. You just got to learn to read both sides.
Totally.
So.
Folks, come over to our website at TFNN.com. On the right-hand side, you see that Nadex banner. You can hit that banner, bring it up, bring the account up. They'll put $25,000 of funny money into it. Once it's up and going, Daryl is an amazing analyzer. In fact, he talks about it every day. We'll talk about it on Friday. Daryl, you have a great one, safe one. Look forward to the show tomorrow.
All right, thank you.
Come right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien. Welcome back, folks. We had, let's see, Marvell was up 13 cents. You had Caterpillar off 77. ExxonMobil was down 30. We had Big Blue down $1.07. Some of the, if we want to take a look at, there's a DSW. This equity here, folks, okay, this is, let's see, a brand, a specialty brand footwear retailer. That just got absolutely taken apart today, down $8.90. It's trading at $23.62. If you do want to see how markets go downtown, though, and go to the last time with any volume, folks, okay, it's just over and over. And, you know, piece by piece, these babies are doing it, and you're going to see the industry do it also. So if we bisect and dissect DSW, what you have is this. Real price, if you have been by first time in the trade book, real price is in there. And real price on this, by the way, $25.76. And what real price specifically is the last time it had price and volume. Because the way the theory goes is that it's a supply and demand situation. Where is real price? Well, guess what? Real price was that. What does it do? Does it stay there? No. Does a double off of that. Goes from $24, goes up to $47. It took from let's see, August of 2011 up till November 13th of this year, of last year. Then, what do you have? See ya, don't want to be a destruction. Now, what you're going to be able to do with this, so make a long story short, is coming right back to real price. Comes back to real price, though, with what? When we talk about a monthly basis, it came back with 53 million versus 45. Now, the stock's destroyed, okay? Stock now, bottom line, wants to get down to $3. This is something you want to just, don't short the stock, but keep your eye on the stock, because what you're going to see is this. What I found is this. The longer that you can stay at highs with lighter volume, the more destruction gets down on the equity. This will be a good one just to watch to see, okay, how does this shake out in the months to come. QIHU, we want to take a look at this equity for one of our tigers. This little baby was up $5.16 today, $95.14. And you get some juice into it. You know, we were looking at this yesterday, and what you have is this, okay? The correlation that it wanted to trade to number one goes to the downdraft that was out there. Can you stay in this another day, Mitch? Yeah. Would I stay much longer? No. What this is doing, it's coming up to ICE. That's what it's doing. Now, ICE is set up about another $4 higher. You know, this had a good pop here today. You had 6.9 million, which is sweet, you know. So, you know, it can absolutely get into this 99.48 level. You know, if it has the same type of volume today, then you get a different ball game on your hands, which would be really sweet. Now, that's on the shorter term basis. The way this is set up on a longer term basis is that you're going to want to be buying every pullback, even when it does pull back again. This equity, folks, is a nice setup. And what you have is that you have a high that's out there at 124 that has real juice behind it. It made sense that it pulled back. The reason being that's a normal pullback in an equity that just never pulled back. Now, the pullback didn't even hit 50%. And this is on a long-term basis. So that in itself says it's a strong equity. I suspect what you're going to have here, you get a higher high. When the correction goes into the market, this will pull back. You can pull back with lighter volume. You get a field day. Inside the small caps out here, so let's take a look at the IWM. IWM, what does the IWM do today? Go sideways, no big deal. It's really not saying quite a bit right now. I would have loved to see the IWM, by the way, hit the swing point of 115.02. We hit 113.46. Yesterday, you got to 113.84. It would have been a lot nicer if you could have got up to that level. The reason being is that when it gets to ice, folks, a normal bounce, by the way, is to ice. So when it gets to ice, it releases that information that, okay, I want to go higher, or I tested it, had lighter volume, couldn't handle price, I want to go lower. If it wants to go higher, it either is going to close over it, or it's going to basically get into it with real volume and hang right underneath it. You get those levels, then you can, get other price movement going topside. The bond market out here, if you heard them all day long, the bond market is absolutely, people just can't understand it. I don't quite know why. I actually start thinking, okay, for some reason, the folks that are bullish on the market, I think they're scared of saying that bonds can go lower because they know that, okay, if bonds are going lower, what is that saying about the economy? And that's probably one of the reasons. Because if I wasn't a technical person, folks, fundamentally, what has happened with bonds is, now I know bonds fundamentally because I started the bankrupt bond business, okay? And I haven't looked at them fundamentally for a long time, but about 2 years ago I started looking at the 10 and 30 fundamentally also, because I can. And what's going on, I mean, it's pretty simple fundamentally what's going on. What's going on is we don't have a lot of bonds. And you have a demographic. And I got this off the real estate business, actually, when I started pulling all the real estate numbers demographically. And what's going on is that, guess what? There's the most amount of people still in the United States are all baby boomers, okay? Well, guess what? They're all getting old. And guess what? They're not going 100% into stocks. A normal allocation, okay, is going up into bonds. So that's one portion of it. Another portion which came up, and this, I've talked about this before, what came up is foreign entities and countries, sovereign countries, pushing out dollar bonds. Now, those aren't the treasuries. They won't put dollar bonds. I start looking at that, I'm saying to myself, okay, so that's about the dollar. That's about the U.S. dollar. They want the dollar. And then, of course, the last rung of it, and this is the biggest one, the last rung of it is that interest rates around the world are low. Okay? So who would you, and I got this, and this is, we get a great bond guy in the Tiger's Den, folks, that's amazing. It's taught us all a huge amount of information. And he'd post up, okay, like, why would you go over here when you can get the 10-year like this? And I'm going back years now, so he's given us a huge education as to what's happening inside the bond market. But when you look at the yields around the world, it's like, oh, really? Do you really want to, go give Greece money, a 10-year, and they'll give you 6%? Oh, great, they don't have any money. Well, here, let's go to, let's see. You get the gist of it. The bottom line is that bonds are going lower, yields, bonds are going higher, yields are going lower. You stay right there, folks. We're going to be coming right back. And don't forget, this is Wednesday. Allie and I will also do Mindful Living from 6 to 7 tonight, so we get 2 more hours of great radio for you. We're coming right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, Tom. You really assembled a stable of amazing people. I mean, they all have different strengths, different areas. And,
yeah.
Man, each one is a superstar in their own way. I've seen it over the years.
Well, listen, man, we appreciate you being out there growling a problem with us. If you guys and ladies and tigers and tigresses weren't out there, folks, we would have zero.
Yeah, it's unique, and it's and it goes back to your basic belief of an open platform, which I've heard you say that years ago.
Right.
And it's really bearing fruit now. I would say.
Yeah, I agree. It is.
Yeah.
Cooking, brother.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We're out 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, a safe day. Let's make it a great night, folks. Let's take a look at one of our Believe cards. This is by Bernard Burson. Miracles happen to those who believe in them. That's a fact. Market-wise, let's take a look at it out here, folks. We had the Dow down 42, NASDAQ off 11, S&P's flat. Gold contract down $6.90, trading at $1,258 an ounce. Now, what we have with gold is this. ABC structure on the way down. We broke the B point yesterday, broke it with volume. Had more volume today, not than yesterday, but you had a fall through at volume, 155,000 contracts. Your A to B equals C to D on the structure, folks, is 1227. Right now, we're at 1258. Silver market, what we have with silver is this. Silver has not broken out the bottom. Now, the real key is going to be, it's going to go after the bottom. Is it going to break it out? I like what silver did both Tuesday and today. And this is what it is. We're at $19.04. The spike low in silver is $18.68. So that wants to get tested. That's going to get tested. That spike low had 36,000 contracts. Yesterday, in the silver market, we did 56,000. Now, the 56,000 contracts was coming against 52,000. So you're coming into that, that's big volume. Not like gold, though. Gold blew away the amount of contracts it was going into. Gold had done 240,000 contracts yesterday. It was going into about 178. So you can see the correlation in silver. Had more, but not like gold. That's the first part. Second part is a little more, it's not important, but what it is probability-wise, this is what it is. When you get volume that comes out of the market before the swing point, whether that's high or low, your probability goes down that you're going to get enough volume, number one, to basically bust out that swing point. And that's what silver's done. You had, yesterday we had 56,000, today 35. You come into that swing point and you start coming in. I'd like to actually come into that swing point on Friday, because what will end up happening tomorrow will be a normal day of trading. In fact, I expect some volatility tomorrow. Friday, summer trading again is going to slow down. Now, Friday in the metals market can be a vicious thing, no doubt. That's why I suspect Friday gold will probably finish up an ABC structure down. Silver will try to spike this. But the way this is, that could get spiked and close inside it. So it's going to be, silver, different animal than gold. Oil market. Oil market was at highs, gave it up pretty quickly, come back inside the lower range. Now, this is the first day that oil's been down in a long time. We came down $1.09. We're trading at 103.02. Once you get back inside 103.11, that puts game on that you're going to get down to 99, 98.10 actually. It had juice on the move on the way down also. So we'll basically see if you get any follow through inside the oil market, but it had all the characteristics that it wants to go lower. Bonds, we've been talking about bonds for a long time. The 10-year and the 30-year, you talk about power, folks. The power was absolutely amazing. 10-year. 10-year goes up 16 ticks. It does 2.8 million contracts. Bottom line, 10-year wants a lot. Well, we're at 126.13. And you got to remember something. When you do ABC structures, folks, okay, A to B, straight line. C to D, you're building cars. A to B, straight line. B to C, consolidation. C to D, straight line. That's what we're in right now. We're in a C to D of an ABC structure on the way up. The yield, the 10-year yield is 2.4. I suspect we're going to see 2.2, quick. I don't think by Friday, but next week, 2.25, it's going to be there. The 30-year right now, let's see, geez, this will blow your mind too. Check this out. The 30-year is going to go under 3% again. We're at 3.2 on the 30-year. Amazing. But guess what? The 30-year, you talk about power, and the 30-year had broke the B point of an ABC structure up, before the 10-year. We're at 138.21. You did 779,000 contracts. There's just a lot of juice under this bond market in a big way. If we do put up the continuous contract for the 30-year, what you're going to see is this. We're going to go through this slowly so you can just see how this has been set up. So when bonds topped out, they topped out in July of 2012. And it was a very fast move down, folks. We went from 153.11, went sideways for 3 or 4 months, and then it just dropped out a bit. It went from 152 and just non-stop down to 127. That's a huge move, flat out. But it did not break the trend that started in 1981. This is what's amazing. I've talked about this before. I've seen so many folks over the course of years say you never should own bonds because there's no money in them. It's the biggest bull market I've ever seen. I suspect it's the biggest bull market anyone's ever seen because it's not over and it started in 1981. What is it? It's 2014, right? Yeah. So 14 plus 20 is 34 years that the bond market's been going up. Now, this is a kicker. I talk a lot about ICE. So what happens with ICE is this. ICE is a normal bounce on, it doesn't matter whether it's a currency, a commodity, an equity, flat out. Let's say that if you go up astronomically, well, you come back to ICE. If you go down astronomically, you go back to ICE. So let me show you something here because this is where this gets really intriguing. And when I was looking at this, I'm saying to myself, oh man, this is such a trip. So if you have the art of time in the trade, you know that what we love to do is that if you get the break topside, great, let it break topside. You have the volume, you get everything. You wait for the pullback because they always love pulling back to the breakout area. You get light volume, you get action. That's where you're in. You put the stop underneath it and you're going for it. Well, when bonds, folks, went from the price point of that 153.11, we got down to 127. All those bonds were doing was going back to the break topside from November of 08. Now, the bottom of that was 112. It didn't go to the bottom of it. What it did is it went to the top of it, which happens. Okay, so that was a natural retracement and a move that had gone up substantially, which makes sense because, you're talking about 09. You're talking about 08, so it took 08 to 013. Yeah, it took five years to come back and do it. So that's what it did, number one. Now what has happened is this. So that's the bullish scenario, how it come back. Now, I'll give you both the bullish and bearish scenario. If bonds are going to fail, well, a normal retracement on bonds would be back to ICE. So back to ICE on the 30-year is at 143.11. That would be the continuous contract. That's only 4 points away on the continuous. We're at 138.21 right now. That would be a normal retracement in even a market that wants to go down. Okay, I'm not in that camp, by the way, because I want to show you something. Particularly because we've been following this for years now. We know the volume characteristics that are inside it. The volume characteristics still inside this bond, number one, is that it's not only going to go up into that level, it's probably going to blow away the 153 and go to 172. The reason where I got the 172, folks, is that that's an ABC structure on the way up. Now, in order to get there, what it's going to have to do is this. This move that we're in right now, it gets up another 4 points, let's say. Then you have to build some cause. I don't see it just going straight all the way. I see it gets up there, build some cause, then you make the move. And what that can be is this. The season I'm going to switch now to the S&P. The season that we're in right now, folks, likes to play out like this. Now, nothing is always the same. It just doesn't, markets, that isn't how markets work. What does happen, however, is that you can get clues as to how a market's trading and then what may run down for the next 4 or 5 months. You stay right there. We're gonna walk through this for the next 10, 20, 30 minutes. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. We had the Dow finished down 42. NASDAQ off 11. S&Ps were flat. We're gonna be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 42, NASDAQ off 11, S&Ps were flat. And as we do each and every Wednesday at 20 past the second hour, we get our man, Mr. John Logan. And, folks, if you haven't come over to our website yet and checked out the videos that John puts on our page each and every trading day by 8 a.m., come on over. The gold video is up there today. It's either going to be the indices, the commodity market, currencies. He keeps them all updated as to what's moving. Check it out, and as you're over there checking it out, you'll see at the end of the video, you can test drive the Signal Box. The Signal Box is a phenomenal piece of software. You'll absolutely love it, and guess what? You can test drive it absolutely free. John Logan, what's going on?
Hey, man, good to be back with you. I was in Colombia last week. Good to be back.
It's great. You know, they just put across the screen that you're on. That is so awesome, man. I'm digging it. I'm digging it big time.
Yeah, I like to pop up for you every once in a while here.
I like it, man. I like it.
And I'm looking forward to seeing you next week.
I know, man. It's going to be great. And I'm definitely looking forward for that.
You know what's great? We also... there's two things that I think your listeners are going to like. One of them is we did some serious upgrades to that Signal Box. It's got audio alerts, the S&P 100, and also got indications of doubles and triples on there at the top of the screen now. Hopefully we'll let people have some really high probability setups in front of them on a day-to-day basis.
Wow.
It's kind of like a nice little scanner for them on top of what the Signal Box already does. And we're also starting tomorrow doing some stock videos using Signal Box to point out the pressure points of putting some high probability stocks for your users out there.
Oh, that's huge, man. That's huge. So, there's no doubt. And folks, please do yourself a favor. Just go over and see what John's doing, because it's clear, it's clean, and it's precise. And John and I, when we were talking, we always talk the DMZ, but you know where it is set up. That's the reality, okay? And then you can make the choice. Like, okay, I'm going to go long, I'm going to go short. But what does happen? There's no doubt. If you stay in that trade and you're on the other side of one of those setups, well, guess what? You won't be in this business much longer.
The good news is, like you're saying, Tom, it kind of lets you know by way of profile theory, if you will,
yes.
Whether it's okay to take longs or okay to take shorts or vice versa. And, for me, it eliminates one side of the marketplace for me. So, right. As we know, you can be long, short, or do nothing. A lot of times it will eliminate two parts of that equation, so you're left with one decent scenario to try to follow up on and put stops oriented, around those inflection points that we provide.
Yeah.
So it's a very neat little tool.
It is, man. So let me ask you this. The setup that you have in gold, well, not that you have, but your profiles have, right?
Yep. Mm-hmm.
This was a long setup, man, meaning, what happened, folks, is that it just wouldn't get over these levels, man, And now, for what I do, John, it's an ABC structure down. It broke the B point, did it with volume. I'm looking for 1227 or something, okay?
Right.
But when I'm looking at this right here, do we use any of the profiles that are on the left-hand side of this chart for price targets, or how does this work?
Yeah, actually, let me log into your show and see what you're doing. To the left, to the far out left, I got your show up now.
Okay.
Let me turn off your volume. To the far left, those are profiles that, just like in today's current time frame, if you look to the left, that's kind of what happened in the past. We're not curve fitting or trying to make things
No, I
look
understand that. Yes, I understand that.
Yeah, but this is a daily, what you've got up right now.
Right.
And what we're looking at are basically, we look at weekly, daily 240s, and we talk about that religiously in a rote manner on those videos every day, to the point where I'm probably putting people to sleep. But somebody told me a long time ago, successful trading is supposed to be boring. We know that.
Yeah, that's a fact.
You put excitement into it, you're going to pay for it. As we all know, we've been around long enough. So,
right.
But as you're looking at this daily, what it's really basically doing is historically showing you where we were picking battle points on the way up and on the way down. Now, we look at weeklies relative to dailies and 240s, and those weeklies, me and you talked about that 1288 magical number for a long time.
Right.
and that was based on a weekly unfair low.
Okay.
So when we started getting confirmations back in, I believe it was January this past year at some point.
Right.
Or I can't see your screen that well, but as we started seeing...
That's right. No, it was. Yep. December 31st. Yep.
Okay, as we started seeing green shoots kind of happen on the daily and breaking above profiles, and coincidentally we were getting above those weekly unfair lows, then it was okay to be long for a while. And the long-term trend on the weeklies, if you watch today's video, by the way, we've never broken or closed above profiles since 2012.
I know. That's what was amazing. I know, yeah.
Which is weird. So every time we've actually traded a bounce on it, it's against the long-term trend down on the weekly. So these dailies that we're looking at just have given confirmations of picking battles on the way down and sometimes on the way up, but those are short-lived trades, and you're trading against the long-term trend down.
Yes.
Gold, we've seen this a million times. Gold unfortunately, sometimes moves drastically the wrong way before it moves the right way, just to get people out of the market.
Sure.
Like, weekends, whatever that old saying is. So I'm still a little wary. These connections and relativities of like the 10-year and the stock market and gold right now, they're all broken apart like I've never seen in my lifetime. I mean, you look at the 10-year, why in the world, why? Just somebody tell me why other than the...
Because it's an ABC up.
Yeah, that's... this is actually the time...
It is. This is an ABC up. It broke the B point with volume.
Yeah. We talked about the fat lady singing or whatever last time on trying to Janet Yellen or whatever. But the thing is sometimes when these types of conditions are there, when so many things are disconnected, sometimes you actually need to kind of step away and just let somebody else figure out the mess first. Because
that's a fact.
There's just not a lot of... I don't feel a lot of leverage, fundamentally speaking, right now to just either dive into the market, dive into buying notes, or even selling gold for that matter. I mean, like, right now, technically speaking, this was like a no-brainer. Okay, boom, I've seen this movie before. Let's just sell the crap out of it. And we're told where we're wrong, above 1,300, no problems. But, is this something that's fundamentally speaking all connected together with logic with these other markets? Who the hell knows?
Yeah. I just put up the 10-year. Man, that just blew through everything. I mean, I know it did, but I get your profiles up simultaneously, so that's interesting.
That was a full-blown buy on the weeklies above 125.
Yeah, no, I can see it. Right.
We talked about passing. I don't know if you got the weeklies up. You got daily.
No, I can sell the daily up. Yeah, all right.
In the 125 area, when we closed above there, it wasn't one of those things where it was going to close above and probably mitigate and migrate back down below. That was just something that was breakout. It's been waiting for a long time.
Right.
God knows what reason that is, but we've just got to go with it as traders. So.
Hey, can you stay with us?
Yeah.
Awesome, man. Okay. You stay right there, folks. John Logan, Tom O'Brien. Come over to our website, folks. Right on the front page, you're going to see on the right-hand side, free video. Check the video out, folks. Check the signal box out. We're going to be coming right back. Dow 42, NASDAQ off 11, S&P's flat. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. John Logan, and we're talking about the Taz signal box. You can test drive that by coming over to our website at TFNN. You're going to see it right on the front page, right in the carousel. As you're over there, don't forget, every trading day, folks, by 8 a.m. Eastern Standard Time, John has a free video up on the right-hand side. John, can we, if you can just walk through the folks through the, I know you put the OEX, the S&P 100. So the stocks are in there now also, right?
Yep.
Which, folks, when you trade the S&P 100, that's like the OEX when we used to trade the options, okay? The bottom line is that those equities that are in there are more than likely the equities that you're trading. So if you want to see what the profile setup is, guess what? Go test drive the signal box. It's a great time to do it.
Actually, there's something else that I just want to alert everybody to. Mike Comey on your team just posted a new video. It's about a 25-minute video that I just did about the new features.
Oh, cool.
This is a very bulletproof system. We had a little bit of a transition period moving over to eSignal from Bloomberg Feed on that.
Yes.
And I apologize to everybody that hung in there with me on that. Was warriors, because we had a couple of weeks there. We were a couple of little technical issues, but those are over with now. And the good news is that the information that's on there now with the new signal-based derivatives that are up at the top, the double tops and triple tops and things like that.
Nice.
Man, I mean, God, it's a very powerful situation.
It is. No, it absolutely is, man. Which is just.
I was down there before, and I think you were even kind of licking your lips about using some of this to trade.
Particularly, that's a fact. No doubt, man. Because what happens, folks, it's a rules-based deal, which is really sweet. It is not subjective, period, okay? And, inside timing the trade, that's a subjective deal, okay? What ends up happening, the volume is absolutely subjective. Now, that's my deal, and I like it, but the bottom line is that it's always nice trading with a rules-based deal across the board. There's no two ways about that.
What's interesting is, we talk in front of institutions globally all the time. I mean, there's probably 10 to 15,000 Bloomberg users that subscribe to our information on the terminal. And when we talk to them, when I get in front of these folks, anybody's got this terminal. I mean, you know how much it costs. It's
right. It's $6,000 a quarter, folks. Right.
Yeah. Tom knows it because that bill comes religiously, and they want the money.
That's right.
So most of those folks that have those terminals, they either have a good game plan already, because if they don't, why would they have a terminal? Or they should have a good game plan. And their MO usually, like for instance on gold or whatever it might be, their whole firm is supposed to try to buy dips on gold because their mindset is gold's going to go up or whatever.
Okay.
What our information does for them, and what we talk about constantly to them, is, look, we're not here to change your market traveling theories or what have you. This is a confirmation system that hopefully will give you more conviction when you're going to scale out of gold or when you're going to enter gold. And that really, from what you just said, I think is one of the more powerful statements, because, hey, everybody's, if everybody traded the same, the market would, market wouldn't work.
Right.
So as those people bring their own concepts to the table, and most of those guys out there that listen to you probably have learned quite a bit listening to your show, they have some theories already. This is just an overlay for a lot of people to give them deeper convictions technically to do what maybe they know they're supposed to do.
Yeah, no doubt. No doubt. Have to love it, man.
Yeah.
As you're talking, it's so great. You're gonna love this. As you're talking, John, I'm bringing up the equities inside the S&P 100 with the profiles on them.
Yeah, I mean, I tell people all the time. It's like, I do these videos every day. This morning, if you watch the videos, I think you could run your trading life a lot of times around the videos. But the signal box is really how I generate and derive some of the information on the videos.
Yes.
We talked about corn this morning, wheat, soybeans. We talk about them every morning if I'm in the country and not on some kind of crazy trip that I can't do the videos. But, we talked about 466 on the July contract. Well, where did that come from? That came right from Signal Box. And we talked about waiting after corn traveled below $5 a bushel in July.
Yeah.
We talked about, there is zero reasons to go long this. There may be some reasons to go short. But Signal Box, hey, we've got a lot of things in front of us that says it's okay to be short, not okay to be long, but it's okay to be long and take a stab at it and pick a battle when we get to those weekly unfair highs, which that Signal Box said 466, and what did we hit this morning?
And look at this, I'm putting it up. Unbelievable. Okay.
466, and we bounced, and I'm gonna pull up the charts. I'm using eSignal. We bounced right to that 474 general area, 475 that we talked was a target.
Yeah, 473 it hit. Right, exactly.
On corn. And if you watch today's video, please get a trial of it. I mean, you'll see that on the grains. And we talked about soybeans. Soybeans, just using Signal Box, these numbers are very apparent if you get it. We're not curve fitting this. We talked about waiting until we got down to 1481.
Okay.
Guess where we hit on soybeans today? $14.82, and we bounced up into above $15 a bushel after that.
Right.
So, you know, why in the world wouldn't you look at these numbers, again, either as an initial trading possibility or just a confirmation on whether you should be trading your product that you normally trade based on having some deeper convictions based around these technical numbers.
Yeah, no doubt. No doubt. Pretty amazing. Listen, folks, it's just great stuff. And, you know, what I love right now is that, you know, as you said, the bonds are going bonkers. The S&P still hasn't done a thing, no doubt about that. The small caps got smoked. They're coming back. You know, we'll see how that's going to react next couple of days. But we're on the cusp of something really sweet here. And I like the idea of so many different vehicles that you could trade. And that's what you have also, folks, inside this box, okay? You know, when you've been doing this a long time, you go from vehicle to vehicle to vehicle. But if you're looking to trade more vehicles and a rules-based environment, this is a very nice way to start that. That's what it really comes down to also. So,
you know, Tom, also it really takes a lot of guesswork out of play.
Right.
You know, I mean, like I said before, it makes me crazy if I listen to all this fundamental news, especially on CNBC. When I listen to you, it makes more sense. If I just let, you know, the noise kind of in the background affect my judgment, I'm stupid. What I want to do is be very sound in my judgments as far as trading goes and use this technical information that's very pinpointed, in my opinion, to really pick the battles and really kind of push all the other stuff aside and just trade pure high-probability setups with decent risk-reward scenarios.
Exactly.
And that's what it gives you.
Yeah, which is just beautiful. And, folks, you can come over to our website at TFNN. You're going to see the video on the right-hand side as you're looking at it. The signal box on the left-hand side. Hit that. You can test drive it right here, right now. Well, listen, man, hey, listen, how is Colombia? What's the temperature in Colombia like now? Like, is this winter, summer? What is this?
You know what? Medellin is a very beautiful city.
Yeah.
It's very similar climate-wise to where I went, Bucaramanga, which is their 5th largest city. Medellin's their 2nd largest city.
Okay.
They call it the city of eternal spring, just to give you an idea.
Really?
It is 70 to 75 degrees all day, all night, every day, all year.
Really?
It is gorgeous. It is, and it's the nicest folks you ever want to meet. They've got a bad, you know, kind of connotation from the old days. That was, you know, a terrible event. You know, we've had terrible events in our history, in our country's history. But that particular town, Bucaramanga, if you ever want to really, you know, go into a great city,
yeah,
down home feeling, great food, and super nice folks. Universities everywhere.
That's
a great feeling. Just get on a plane out of Miami and head down there. It is a wonderful
so when you say that it was bad before, is that when you mean that cocaine, Escobar, and all that stuff?
Yeah, I think so. That's
that Medellin. No, I'm familiar with that name, Medellin. Okay, cool. Right. Yeah, right. Yeah, you know what's amazing? You know, in life, folks, it is amazing that they could clean that whole deal up, because it always seems like when all the gangsters take over everything, it seems like you're never going to get out of that. And then, you know, they did, which is great, you know.
Well, they had a president that just took a hard stance on everything, and there was a lot of kidnapping and you know, things of that nature.
Yeah, they were freaking killing everyone, man. Right.
Well, you know what finally worked, which was, it was kind of a weird stance to take, but it worked. Is he said, look, if anybody gets kidnapped, if your family member gets kidnapped, write them off, because all we're going to do to stop this is take a bunch of Black Hawk helicopters and go in and kill everybody. And that's when they stopped, when they knew they could never get away with it again. And some people pay some price, you know, along those lines. But, and he basically annexed a third of the country to FARC, which is their rebel kind of guerrilla contingent, and said, hey, look, you guys are going to stay in that part of the country, don't come out, or we're going to mow you down. And then that's when everything started changing. He played hardball big time.
Right. And the economy, it's a good economy down there?
The economy is booming. If you go to look at their stock exchange, how it's performed in the last couple of years, last 5, 6, 7 years, unbelievable. Great place to do investment.
Well, listen, man, you have a great week. I look forward to seeing you next week, man.
Sounds good, Tommy.
Thanks, John. Have a great one. Have a safe one. Stay right there, folks. We'll come right back.
Andy Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Let's go to Fred in Massachusetts. Hey, Fred, what's going on?
How you doing? It's actually Frank, but looking for some curiosity on a stock called Code Red, K-R-E-D. You got any insights?
K-R-E-D.
Yeah.
Let's see what we got here. K-R... Okay, so it's a wellness beverage made from Hawaiian coffee berry. The low's 48 cents, the high is $1.36. There's no income, right? So where'd you get this thing?
One of my friends out in Hawaii sent it to me.
Okay.
They said, yeah, take a look at it. So I was like, all right, sure.
You know, it's wild here. Now, this is an over-the-counter stock, folks, and it doesn't have any information, okay? But what is interesting here, Frank, is that it has this high volume high, man. So, like, when this thing spiked, let me just see something. Most of the time, these things, what they do is, let's just see. So, short positions. What you'd have to do is that you have to first find out if they have any money. Do you know what I'm saying?
Okay.
And just make sure it's not a pump and dump. But let's see. I just don't have enough time to run through this for you right now. But I can run through it technically. Right. So what you do have is this. So this is always intriguing when this happens because you get a high volume high. All right. So somehow this came out at about 71 cents, spikes up to 136. Okay. It's coming back, and you know what I would do. You're at 61 cents, right? Once you find out whether they had any bread, right?
Okay.
It wants to try to test this 48 cents. That was the low. But it's coming back in there with dramatically lighter volume. You know, it did 201,000 shares versus 2 million today. So if you think they can stay in business, you want to take a shot at it, you know, the closer you get down to there, it's good. And then, you know, what you'd be doing is this. You'd be taking a shot at 48 cents. You'd be saying you get a price target of $1. It might go 130, but the bottom of that high is $1. And just, you know, risk-reward-wise, figure out what you want to do there. What I would make sure of, what I don't, you're just going to do more research on the type of spread that it has. It looks like it has enough volume. That's, you know, I mean, when I take a look at it, it has, yeah, it trades enough volume. It's not huge, but there's plenty of days that you get 200,000, 500,000 shares. So, you know, they have it going, so.
Okay.
Good.
Could there be something else interfering with it that's keeping it from climbing, or they're just kind of like bobbling around with it?
No. This is just when you haven't. First off, when you have an over-the-counter stock, right?
Right.
You don't know whether it has any money, and that's really important to understand. You know, anyone can go in an over-the-counter stock. Okay. Most of the time. And some of them are great. I mean, they don't have to be bad. Okay. That's an inexpensive way to do it. It doesn't mean that it's bad. What you do want to do, though, yeah, see, this is new. This is October of 2013. It looks like it was there. What I would do is this. Here's another company. Check this other company out, because the same president and CEO is running this one. Ran Sandwich Isles Communication from 2008 to present. See if that thing has done anything, or if in fact that was an over-the-counter deal that just went kaput too, because that'll tell you a lot. That's a way, folks, by the way, that you can get a number on when these over-the-counter ones come out. Go up and, you know, I find out where whoever was running, what else they've been running, because if they've been running other ones and they've already trashed the company, well then that's a great way of not getting into the company.
Was that Sandwich Isle or Sandwich Slew?
No, it's Isle. S-A-N-D, Sandwich, W-I-C-H, I-S-L-E-S, Communications, Inc.
Okay.
And he's still there. He's running both of those companies right now. Okay, man. Have a great one.
Thanks.
Okay, bye-bye.
See you later. Bye.
Take care. Let's go to Steve in Nashua. Hey, Steve, what's going on?
Yeah, hey, Tom, thanks. I know you're up almost out of time there. It's going to be winter again here, 40 degrees tonight.
Oh, my God, that's sick.
Yeah, it's sick.
40 degrees. You got to get down here, man. It's freaking gorgeous down here. So let's take a look at it. We got Pan American Silver. She's down.
Yeah, I'm looking at a 2-year weekly.
Yeah, okay, so let's pull it up.
2-year weekly looks like the volume's getting less and less.
Oh, it is. No, it is. Listen, this is going to be a buy. I mean, this thing wants to go to $15. I mean, I like how this is setting up. The real key is going to be the buy. The first place I'd look, Steve, is so you get the high volume low at 1023. The real key is going to be, does it reject the 1175? You know,
okay.
That's the June of 2013, right? Now, see how that matches up with September of 2013? You get the high is, so it looks like it's going to be around that level, that this should basically reject lower price. But this is we've gone lower. It has lighter volume. The silver market is stronger than the gold market right now. And what we do have here is that this is not an ABC down. And a lot of the golds are, This is, let's see, so 6.2 million, actually we have to wait a couple more days. It might be. 1 second. What day is today? Wednesday, right? But we only had 2 days of trading. Oh, this is going to be close, man. Hold it. This might be an ABC down. 1560. 330. Oh, this is interesting. 330 still gets you that $10 price point, man. That's the number. This is even better. Okay. Hey, Steve, it's the low. If you do the A to B equals C to D, it lines up at 1023, which is the low of the high volume low of June of 2013, which is
looks like an ABC down, or
yeah, because weekly thus far in 2 days we get 3 million shares. All right. The weekly characteristic is 6.8. So if it did the same, 3 million would right now it would be at 6, right? And what you'd have to do, folks, for the extra day, you got to add on another 1.6. So you'd be at 7.6 versus the B point at 6.8. So you get an ABC structure down. And I love it when you have an ABC structure down or up, folks, and they go to the swing point, the lower swing point. It's beautiful because you have a price projection. You put your stop on the other side of it. In this case, I suspect you wait for it lower volume and rejection, but the trade would be sweet because it would be a 50% trade because 1023 would be the buy, and you're shooting for 1563. And this stop.
So the A to B down.
The A.
Wait for the B to C, right?
Oh yeah, no, yeah. Wait for it to get to the You wait for the ABC to end. Oh yeah. Cooking, man. Have a great one. Have a safe one. You stay right there, folks. Allie and I are coming back from Mindful Living. We're going to keep you healthy, wealthy, and wise. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Look forward to speaking to you in a few minutes.